All right, traders, a very good afternoon to you all. This is Anil from the Tradepsyche, and I welcome you all to the post-market analysis, outlook, and expectations from the market for tomorrow. Tomorrow will be Nifty 50's expiry, right? So we'll discuss that how can the market be tomorrow, whether the markets can be bearish, bullish, and or whether we can see a sideways expiry or maybe a trending expiry. All right. Apart from that, we'll also look at some of the crucial levels for tomorrow. That those levels will be resistance or support, which will be some of the crucial support, which will be some of the crucial resistances. Right. Apart from that, we'll also analyze that what is the change in Y data. Uh, right, and we'll try to figure out what is the bias. Correct, and we'll also figure out that how was the market today and what discussions we had in our Telegram group. So without any delay, let's start the discussion. I'll go to my Telegram group. So morning, right? Now what happened today, right? I think up till Friday night, Gift Nifty closed roughly, I think around minus 270 points. But yesterday night, Sunday night, or maybe Monday morning, the news came in that the successor to Khamenei, Ali Khamenei, the Iran's supreme leader, that the successor to Ali Khamenei will be his son, and his son, as the market, as the sentiment, anticipates, as the market knows him, he's a more radical leader than Ali Khamenei himself. So markets got more worried that more oil shocks will be coming, more war will be coming. Right, and that is factually true also because his son is more radical. His son is more, aggressive than his than Ali Khamenei. Right, so his son succeeded him, and the markets got more spooked that yes, he might give a befitting reply, more befitting reply to the US, and we also saw some news coming in, coming of attack on the oil refineries, right? So that was actually going on the whole weekend, and we did not, the volatility did not calm down. There was no de-escalation in the region, right? Strait of Hormuz is still closed down. So seeing all these factors, Gift Nifty opened additional 500 points down around 6:30 a.m. in the morning. And not only GIFT Nifty, but the major markets, the major global financial markets, whether it is US, whether it's Japanese Nikkei, whether it is Korean, all the markets they opened heavily gap down, right? Nikkei was, I think, 7%, 8% down. It was lucky. We are lucky that we are not hitting a lower circuit on Nifty, right? If that would have been the case, then I think there would have been much bigger problem. But strangely, as we anticipated the data, we'll discuss that what we discussed that what today might happen, right? So today, when the markets opened, we mentioned that effective gap down will be roughly 880 points. And if you look from this closing, we closed roughly around 470, and the low was around 720, 730. So roughly 800 points we opened gap down. But the day low was marked by 23,700 roughly, and for the complete day we did not break that low. Right, now what did we discuss? I posted, I genuinely want to make you guys see one of my posts, right? And let me go to it. Right, this was one of my posts which got a good reach, and it got somewhat viral because my posts generally they do not go viral. And I mentioned that look how shamelessly clients have taken aggressive long position. Now, I don't know why this post went viral, why this post had 28 bookmarks, 46 likes. It's just that I called out, retailers as shameless, and I clarified that, I'm not literally calling them shameless, but like we say, right, that how can you even dream to carry long in such a bearish market? If you see, clients were aggressive bearish, bullish for today, right? In anticipation that some de-escalation might happen, but it did not happen. And we mentioned that if FIs are aggressive bearish, a gap down will force the retailers to panic and exit the longs. and FIs will smartly book the profits, and in the second half, markets will move up when the FIs have exited. Right? What the markets did here today? If at all you will look on early time frame, the whole day we did not breach 23,700. That was the low of the day, and I think in the second half we saw a good green candlestick. This was the discussion we had. This was the analysis of the data I posted yesterday, and after that we analyzed the data. We mentioned that clients, retailers, they are aggressively long and are expecting a buy and dips market. FIs are aggressively bearish and they expect sell on rise market. Pros, they also expect sell on rise market. Conclusion, very important part. Conclusion. Since retail is long and FI and pros are both short, we should expect market to not recover post the gap down. But the gap down is very extreme, so we can expect sideways nature post gap down and slight pullback as shorts will get booked at some point of time. Now, what happened here? See, if this would have been a 50, 40 points gap down, right, the markets would have considered that as a flat opening. Then this data would have perfectly worked and we would have seen an intraday sell on rise markets. But already what pros and FIs were anticipating, what they carried their positions, that happened. We already opened 700, 800 points gap down. If in a day they are getting 700, 800 points, then what else they would want in the markets? Tell me, was there any scope? Because after such a big gap down, right, the markets they do not generally go more down unless and until a nuclear attack has happened. We are very much near to a World War III, and still if the markets are opening 700, 800 points gap down, you cannot expect the markets to go down further. And I think from morning itself, some de-escalation signs were coming. So today, even India VIX, we will discuss India VIX. India VIX also slightly declined. So this was the plan we had, and most of the people in our community, they none of the member they carried long, and I was actually very happy in the morning. Most of the people were neutral, and some of the people were short because on the weekend, we carried neutral positions. We did not carry shorts. We did not carry longs. But we mentioned on Friday's, uh, you know, market ending comments. The weekend also, the weekend also markets are, this weekend markets are also anticipating good military action. That's why VIX blasted and crude too. Anyways, it will not advise to carry any bias position. And even if someone wants to carry light shorts, hedged. Simple. We never mentioned that, carry longs just in the anticipation or in the hope that, markets might bottom out something. If they have to bottom out, they will bottom out and they will bottom out in front of you. But you cannot carry positions in the anticipation of that, especially on the weekend, right? And at the just after the pre-open, we mentioned that the futures have gapped down more than the cash. So intraday plan, we are opening a gap down at 23,800. Nifty has a small support at 2300. So we'll have to observe for at least first half an hour. Mostly we should get a calm around 23,500, 600, and the panic should not come beyond that. The panic, we just missed by 100 points. The markets, they stabilized and they bottomed around 23,700. But still, our target is still open 23,100. Right, let's see. Then we mentioned that first ROI change. More number of shots have been added, which looks logical too. Major resistance is at 23,800, support at 23,700, more downside below 23,700. So we mentioned that more downside will only come below 23,700, right? Then something positive came for the market, right? That the G7 countries are, planning to release the oil reserves so that they can bring the oil prices down, right? So from that point, the oil also started correcting, and I think India VIX also started topping out. Then we shared some audio notes, right? Uh, in these audio notes, we basically explained that after a big gap down, you cannot essentially expect that the markets will go more down. And since we'll discuss on the option chain, since the premiums were very high on the put side, it was a dream for option sellers to sell the puts, right? Then we mentioned that some of our old posts that what we had anticipated, then normal. price action, normal discussion, right? And prior to post that, uh, we mentioned that perfect anticipation of the data, and then we sent the market ending comment, right? So this is what we discussed, and this is exactly what the markets did. Essentially, if you see the first 4 hours in the market, one, two, three, four, five, first 5 hours, and if you see, do you see any correlation between these two moves? Any similarity? This move and this move. Four early candlestick sideways, then a dump. Four early candlestick green, then a rise. So people now are anticipate the whole day today. People were anticipating that a dump will come, and I'm sure that retailers would have carried shorts today. On the day when it was not advised to carry shorts because I think some de-escalation might happen, still we are not carrying any bias positions because the only thing which we are doing is the whole day we are doing completely sideways. We are opening gap up, gap down, gap up, gap down, and the only move which is coming in the last half an hour, just after the 3 p.m. Right? So there is no point trading intraday, and the markets are not even giving us opportunities on the intraday basis, right? And if you see on hourly basis, I think this was the last time on intraday level we fell. Post that we opened gap down, then we recovered. Then the recovery also got retraced in three hourly candlestick. Then again, those three candlesticks were retraced by two green candlesticks. Then up, then again gap down, then pure sideways, then gap down, then pure sideways. So it means that the markets do not want you to trade on an intraday basis. And the earlier you will understand this, the better it will be for you. Right. So now let's start the discussion for tomorrow. Let's uh, analyze that what price action market has made today. And another day, another gap down, and another scenario, another situation where the market opened gap down but closed a green candlestick. Right. Now it will be very important to see today's, I think, global market that what they are going to do. But the strategy will be simple. 2490. Above 2490, we have a gap till 24500. Or maybe you can consider a gap till 24300. Right. So as we have discussed, I'll leave the link to my weekly analysis video for this week. Do check it out. Right. We discussed, I think in weekly analysis video, we discussed that unless and until we capture 24,500 on the upside, we cannot, not even 24,500. We mentioned that unless we capture 25,000 on upside, we cannot think of even going swing basis long. But now, what I'm trying to show you is something a little bit different, right? So, what Nifty is currently doing is it's moving in an widening channel. This is a very common price action. You can Google about it and you can research about it. So, in this widening channel, what happens is any rise is followed by a widening fall. So, this fall came, the rise was shorter, but the fall was more aggressive. The rise and the fall. So we will be following this kind of price action. I mean, we might be following, but if at all we again break this channel, then I think more pain is on the downside. So for tomorrow, since today we had a bloody gap down, but still we managed to close on green. So I think from my perspective, this is slightly positive closing, right? So our plan is to capture a positive or a bullish move till 25,000 because the trend line which is coming from the top, it is exactly like this, or maybe you can consider it a channel like this, right? So If even if you consider this channel, we might do this uprise and we can see a pullback till 24,800, 25,000. But the moment we reach 25,000, do not think to go long. That will be an apt point to short again for 22,000, 21,000. Right? So how do you trade tomorrow? Simple, just one single level, 24,100. Our 24,100, any early candlestick tomorrow closes in the first hour or second hour. Trade for an up move. If you are an intraday trader, then and only I'll suggest you to trade. But if you are a swing trader, let the markets go on upside and let, if you're a swing bull in the market, unless and until we close daily or weekly over 25,000, don't think to go long. The moment markets reach 25,000, try to short slowly. If you see continuation negative pattern, then increase your shorts, right? But as part of price action, if we are falling in the market, we cannot always fall, and if we are rising, we cannot always rise. So the markets always moves in a structure like this. Even if we are falling down, the falls will be stricter, the pullbacks will be smaller. The fall will be stricter, the pullbacks will be smaller. This is a bearish cycle. So we will be anticipating for that, wherein the down move has come a very sharp move. Now we anticipate a move like this, then a sharper move like this. All right. So how to capture this up move now is any move tomorrow above 24,100 and sustaining. Sustaining is very important. You can target the first level as 24,300. There's 200 points move you can play tomorrow, and 24,300 will be the first point where you can short the markets ideally, because 24,300 was a good support to the market. So the markets can go for a gap covering till 24,300 if the markets are bullish, and if there is some de-escalation in the Middle East, the markets above 24,300 can also go till 24,500. But I personally am not expecting above 24,500. If we start to go above 24,500 in maybe tomorrow's market or day after tomorrow's market, then I think 25,000 will be inevitable. Because above 24,500, there is not much resistance here. We went through huge volatility in this range, right? This is the case for upside tomorrow. If at all tomorrow we breach 23,700, expect 23,500, and once 23,500 breaks down, I expect quick 23,000, right? But the no trading range will be essentially 23,700 to 24,100, 400 points range of no trading range. Unless the markets are in this range, do not trade the market. Any early close above 24,100, aim for 24,300 and 24,500. That's it. All right, traders. From my perspective, the daily close is not that bearish, although we are again closing below prior daily low. From that perspective, from that system, we are still negative. We are still in the sell on rise. And yes, still I'm not asking you to go bullish. I'm most only asking you to go bullish on swing basis or positional basis is above 25,000. But as we all know, when the markets they move in a bearish territory, they do not keep falling always, unless it's a pure crash due to a like COVID or maybe attack on the country or country getting involved in the war. Right? Markets always follow price action. So markets fell, they restored here. I mean, they traded for a couple of days here. It's this zone is a good resistance zone here. So that's why I'm saying the moment markets will come till 24,500, try to short the markets again. All right, getting my point for Nifty. Let's quickly go to Bank Nifty. And Bank Nifty, if at all you remember, guys, we had discussed, I think, 2 weeks back that Bank Nifty, when Bank Nifty was at 60,000, if 60,000 breaks down, you can expect 55,000. If you guys are a regular viewer of my videos, we discuss this. You can go and check my last 2 weeks analysis videos. From this moment, I'm saying that Bank Nifty can top out, can top out, can top out. And from daily perspective also, I mentioned that. And actually, if you see right today, Bank Nifty was 4% down when Nifty was 2% down. Bank Nifty fell more aggressively today. Why? Because there was a cyclical top in Bank Nifty. All right. So Bank Nifty is more aggressive bearish than Nifty. And when I mentioned that Nifty is trading below all its moving averages, so Bank Nifty had to, come in sync with Nifty. I also mentioned this point. So for Bank Nifty tomorrow, same uh, drill above 53, above 56, 300, 57,000, but try to short again at 57,000 because 57,000 is a good resistance. The only challenge is we have created a huge gap on Bank Nifty. Just figuring out that when was the last time we created a huge gap in Bank Nifty and how did it get covered? I don't see any huge gap in the near history. So follow the levels on pure technical basis. Above 56,300, aim for 57,000. But if 57,000 comes, try to sell Bank Nifty. I don't see any other valid price action at this point of time. But if 55,300 breaks down, aim for 55,000, 55, 54, 500, and 54,000. That's it. That that is the only level you need to remember for tomorrow. We forgot one more thing. On 15 minutes time frame, if at all we open a big gap up tomorrow, then we will cover this gap on in the gap up only, and markets should take a resistance from this point and cover the gap up which has happened, then start to go bullish. If at all we open a big gap down, still the strategy would remain the same. If at all we are opening here, I would not prefer to short the markets further unless the day low which has been found, if the market goes up and if it again come down if it breaks. Unless the day low breaks, don't try to short the market. Right? And one very interesting I think I will show you. See, I think on 2nd of February, 2nd of March, sorry, not February, 2nd of March, we opened the gap down, but the first 15 minutes candlestick was purely green candlestick. And the rest of the day, we slid down just because the first 15 minutes candlestick was green. Today, the first 15 candlestick was red. The whole day we went. Similar pattern, but different algorithm. Right? If at all you open a big gap down tomorrow, don't panic, but don't even expect a continuation fall like this. It largely depends upon the data. If today the clients would have been bearish, right? I think the markets would have made the first 15-minute candlestick as green to trap the clients. But since clients were extremely bullish, we made first 15-minute candlestick as red. Simple. Same strategy for Bank Nifty. If at all you open a big gap up, I think I'll not be interested in the market for tomorrow in Bank Nifty. If at all we open flat, I'll wait for this range to get broken out. We'll quickly discuss the option chain. Now, the IV is very high, and that is very logical because the VIX is high. The straddle premiums are also very high. Roughly almost 400 points of straddle premium at 24,000. So I expect that this much high premium, technically markets, they expect, and we also as traders, we expect that yes, some move will come, but move has come. And I think option sellers would want to eat this premium tomorrow. So tomorrow, although the premiums are high, but still I'm expecting a sideways session tomorrow. But the catch here is if these premiums, straddle premiums are not getting decayed by 11 o'clock or 11:30, then I think in the second half, wild move can come, either on the upside or either on the downside, right? Let's quickly discuss the change in OI data. The change in OI data is today, uh, aggressiveness in bearishness has reduced, but still on an average, 3 CR of shorts have been carried and around roughly 73 lakh of longs have been carried. That gives me a pure sense of bearishness with heaviest resistance at 24,000. All right. The market has made a support at 23,700. So this is the range for tomorrow, 23,700, 24,000. And this is what we discussed on Nifty's chart, that 24,100 roughly. Above it only you can expect a good momentum till 24,300. Right? Total open interest, I think good amount of longs and winding have happened today from in the money. Decent support is at 23,800, 23,700 for tomorrow's expiry. My perspective, I don't expect 23,700, 23,800 to get broken down tomorrow. No, I don't expect. What I expect is a sideways expiry tomorrow with the range of 23,900 to 24,100, 200 max, 300 to 100 point range. That's it. Right. Bank Nifty, why change? Still very bearish data on Bank Nifty. 13 lakh addition of shorts, only roughly near to, very near to, not very near, but near to 4 lakh addition of long only. Right. So the data is still bearish in Bank Nifty. Expect sell on rise momentum for Bank Nifty to continue, but still, as we mentioned yesterday, right? I think if you want to look right, 58,000, 60,000, huge longs unwinding has happened. If you remember on weekly analysis video, we discussed roughly around 60,000, huge put buy has been is there. So if you look at Bank Nifty today, Bank Nifty has dropped almost 2,000 points. So this is something very big. It is not a small thing, right? So expect sell on rise in Bank Nifty, but I expect IT to perform a little bit because banking is delusional and banking is weak. So expect IT to perform, and IT will make, I think, Nifty stabilized, and banking will be weak tomorrow. Banking may be weak tomorrow for tomorrow. Banking may be weak, but IT will tackle tomorrow, and it will keep Nifty. Mostly, it will keep Nifty sideways. That's what my anticipation is. Let's see. It will be highly dependent on global markets today because what else we are doing? We are just dancing in the direction of the global markets. Sorry. Right, traders. So this was the discussion for tomorrow. Sorry, this video got a little bit long, but I hope I'm able to make you guys clear that how to trade tomorrow. Overall, I think still from Nifty's perspective, we still have slight bearish scenario, but we have bearish scenario, but not that much, right? The intensity in of bearishness in Nifty has reduced, but still it exists. It exists there in the Bank Nifty, right? So trade carefully tomorrow. Tomorrow will be an expiry and Nifty expiry. And I think IT will be used to keep Nifty sideways because there is a very good premium at the money, and every option seller would want to eat that premium, right? So trade carefully tomorrow. If you feel that your range, whatever the range you have discussed, is not getting broken down or broken out, don't trade the market. All right. Cheers. Stay safe in the market. If you have any doubt, let me know in the comment section below. Good afternoon.